All right, we're live. Hello, George. Are you here?
Yes, I'm here. Hello, hello. I'm just posting the links in Discord. Um, and we should be good.
Can everyone just check if you can hear us and if everything is clear, if you can see the screen, if you can see on both my stream and George's stream, if it's possible. So you can find us both on YouTube. Just check if you can hear my sounds on George's stream and if you can hear George on my stream. That would be great.
Yeah. All right. So, another Bitcoin under the loop with Jack and George. We'll start off with Jack. His analysis, more the FA side of stuff, macro analysis on Bitcoin. And then I'll give my thoughts. We'll talk about how I personally set targets for Bitcoin when we're and for everything in general. Set targets when price is trading and price discovery. We'll do that, and then of course we'll also cover some levels on Bitcoin and talk about the lower time frames. So just quickly, again, I see we have some viewers now. Can everyone hear me? Can you see the Bitcoin chart? And can you also hear Jack?
Yes, hello. Can you hear me, guys? Just to check, this is our third live stream together, so we hope everything is going well. It's been a while, George. I think our last stream was in June or May or something. So
Yeah, a couple months ago.
a lot has happened till then. So let's see. I think before we were like half of the price that we are now. I think it was around 45k or 50k in the range, like we were since March. So yeah, I'm excited to do it today.
We've
So
come a
like
long
George
way.
said, I'm gonna do more fundamentally and more macro zoomed out, and then so basically along the stream, if you go further and further towards George's part, then he's gonna zoom more in, and especially today. So what's super important is how high will Bitcoin go? Where can you take profits? Where should you sell? Where can you buy more? And I think George will go more in depth on that.
Yeah, exactly. All right, so we've had some comments that the sound is okay, so I guess we'll get started. I will share Jackie's screen now. Just 1 second. How do I? Yep.
Also,
Now,
if you guys have any questions or comments, just put them in the comments or on my stream or on George's stream, and we will try to answer every one of them at the end of the stream. So we will do a short Q&A at the end of the stream. But let's say if the question is really specific to the thing I'm talking about at the moment, then I can maybe fit it in. But normally we will answer all the questions at the end of the stream. And it will also be more Bitcoin related. So if you guys have any meme coin or shitcoin question, that will not be for this stream.
exactly. All right.
But it's interesting at the moment.
Yeah, it is. But that's for a different stream. All right, your screen should be visible on stream. So Jack, take it away.
All right. So the most important thing that happened these last few weeks was, of course, the U.S. elections. The U.S. elections. Why? Because we knew if Trump was going to win, Bitcoin would go way, way higher. If Kamala was going to win, Bitcoin would go down. But now, and the thing was, okay, I thought it was going to go up like 10 or 20%, but we're like in a super accelerated bull run. Bitcoin went towards like 90k, 93k even. And why is that? And I think the main reason is because of the strategic Bitcoin reserve. And we saw this tweet from Senator Cynthia Lummis saying, we are going to build a strategic Bitcoin reserve. And this was the most important thing why I think the bull run started and why Bitcoin broke out of this range towards 93k. But then after this tweet, so basically Senator Cynthia also tried to pass this bill. So basically she proposed a legislation to purchase more than 200,000 Bitcoins per year over a 5-year period. which is crazy. So the US wants to acquire 1 million in Bitcoins. And if you want, you can just look this up. It's on the government website. So the Interlumens tried to pass this bill. But the thing is, okay, everyone went crazy about this, and everyone is thinking, okay, this is going to come for sure, because Trump has the Senate, has the House, and of course he's the president. So of course this is going to be passed, but I don't think it will be that easy. I got here an article from Novogratz, which is I think it's the head of Galaxy Digital. Yeah. So he's a real Bitcoin bull. He gives it a very low chance, and I think it's well. I think just the Bitcoin reserve will just be the US not selling their coins that they already had from Silk Road and all the other Bitcoins that they confiscated. I don't think they will actively buy more and more Bitcoins. Maybe in a couple of years, but I don't think it's that easy for Trump to pass this right away. Or let's say if it gets passed, it will not be in the coming weeks or months. But like crypto Twitter and every article is just thinking this will all happen tomorrow or in the next couple of weeks. And I don't think that that's the case. I think we're seeing too much FOMO because of this, because of the bill, because of everyone thinking there's going to be a strategic reserve like tomorrow. But I don't think that's the case. I think it's very good that Trump won for Bitcoin. I think a strategic reserve is maybe coming. Maybe they will just put the Bitcoins that they acquired, that they confiscated into the reserve, but that they will buy Bitcoin, I don't think that's the case. You can speculate on that how much you want. I don't think that's coming soon. But the thing is very good, because now other nations are maybe hesitating as well if they should start a strategic reserve or not. So that's good in the long term for Bitcoin. I think every nation state now is thinking, or at least trying to put out a strategy on how to acquire Bitcoin. If not, if yes, so that's something worth speculating on. But I think it's all going too fast. I think every article in the world, there's way too much FOMO. Everyone is thinking this is going to happen tomorrow, and that's why we saw the price going up. When I go around with friends, or even when I go play tennis, everyone is just talking about this. Every noob, every normie is just thinking this will happen tomorrow. And that's why everyone is foaming. I saw even my old tennis trainer, he's like 65 years old. He asked me, can you help me set up a Coinbase wallet? And that's when I thought, oh, maybe we're local topping here, so maybe you should watch out. Yeah. So that's how I want to do it today. So basically today, how I'm going to do it is I'm going to tell you about the most important things that happened, the most important things on how to value Bitcoin. And I'm going to say if this is a good signal, if it's not a good signal, if you should buy, if you should sell based on that signal. So based on the bill that was going to pass, the bill that was proposed, that was very good. So you should have bought the moment you saw this. But I think now the speculation went way too far, and I think there is way too much FOMO. And I think this can be a local top based on that, because I don't think this is going to pass tomorrow.
And maybe sell the news event, right?
And maybe sell. Well, if this actually happens, I don't think it will be a sell the news event. If the US government is going to buy 1 million Bitcoins and there are only 20 million Bitcoins, 21 million, I think it will be a good event.
Yeah, obviously.
But maybe sell the news event
Sell the hype,
the moment it comes out, when they will be speculating more and more, and when it's maybe more sure that it will come, the price will rise, and then maybe when it eventually happens, then it will maybe drop like it always does. Mm-hmm. So you can just check it on the government website. One thing based on that I wanted to show is the S-shaped growth curve. So basically, S-shaped growth curve is like the adoption curve, and let's say every nation state in the world, every country in the world will be adopting Bitcoin, will be putting Bitcoin in a strategic reserve. Then you will just see the world population using Bitcoin, and then there will be more and more demand from Bitcoin. And I think that's what we're seeing right now already. So we're seeing the FOMO has started. But if eventually the US will be starting a strategic reserve for Bitcoin, and other nation states will do as well, then the acceleration will be super fast and we will see this S-shaped growth curve. So it's something to keep in mind. So I don't say sell all your Bitcoin because it's not going to happen soon. The thing is, if it happens, Bitcoin goes to 1 million plus. And we all know that. That's why we're all here. But don't FOMO. We're here for the long run. It's not going to happen tomorrow. Then the thing, so I'm talking about the presidential elections, and there is something called the presidential election cycle. That's something real common. This is a chart from the S&P, so the stocks, equities, and basically what you see every 4 years, it's like a known term in economics, is a presidential election cycle. And most of the times, this is the data from the 1900, year 1900. And always stocks generally move at the same how can I say it, at the same ups and downs during the election cycle. So now at the moment we are here, the new presidential election cycle is starting, and basically how it goes is the first year it's a bit slower because everyone is afraid there's going to be new policies, like for example the Department of Government Efficiency. Nobody knows what that's going to be with Elon Musk, and so it's going to be a bit slower, but it's trending upward. So most likely when there's a new president, the stocks go up. Second year it comes down, and then the third and fourth years are the best years, and these are the years that we just saw. So normally, based on the presidential election cycle, I got some more data as well, because I don't always believe in one chart, especially for this kind of data, but it's always the same. So usually first year it goes up. So at the moment we're in the first year, so S&P should go up. Why is that important? Well, at the moment Bitcoin is super big, and unfortunately it correlates and it trades very well with the S&P and equity. So if you see the S&P going down, you can be sure that Bitcoin will follow as well. But if you don't believe in that, you can just look at what Bitcoin did previous years after the election, and usually after the elections, Bitcoin price moves up. I don't say this is solely because of the elections, because like everyone knows that's in crypto or is investing in Bitcoin, we know we have these halving cycles. So every 4 years there is a minor reward halving, and that's why we have these cycles. Well, that's what most people think, but I'm gonna say otherwise today. So I think these halving cycles maybe had an effect a couple of years ago when the internal inflation was, so when the block reward was high in Bitcoin, had a lot of effect. But I think now every 4 years, when the halving reward goes in half every 4 years, I think this will have less and less effect on Bitcoin. But I don't even think that's the main driver of these 4 or 5 years cycles. I think, and you can just look at the data, the main driver of Bitcoin and the reason why we have these 4 or 5 year cycles are not the election cycles, are not the Bitcoin halving cycles, but is the global liquidity cycle. I got it in big here. So basically the global liquidity cycle, if you're interested in this, I just made a video about it. I interviewed the creator of the concept of the global liquidity cycle. It's Michael Howell from Cross Border Capital. So you can look at my YouTube channel. It's at Jack Green Crypto. And I interviewed him and I asked him a lot of questions. And at the end, we were saying the impact of global liquidity on Bitcoin. And the impact of global liquidity on Bitcoin, so why is this important, is because this is super correlated. You see these global liquidity cycles, and it follows Bitcoin perfectly. So if you can look just here, Bitcoin, if Bitcoin goes up, global liquidity spikes up. So all these massive bull runs, they coincide with a massive increase in global liquidity. I got another chart here as well, I think, where you can easily see the correlation. So here you can see the correlation a bit better. And it's always when we have these massive inflows into global liquidity, we see these bull runs in Bitcoin. And the correlation is super good. I will talk about the correlation a bit later. But this is the main driver of Bitcoin. So you have to look at what global liquidity is doing, if it's expanding, if it's decreasing, and then you know the direction of Bitcoin. Lynn Alden, she put out a research report as well. I don't know if you're familiar with Lynn Alden, George.
No, I'm not.
So Lynn Alden is like a super famous macroeconomist. I think she got like 900,000 followers on Twitter. She wrote a book as well about money. And she recently put out a research report about Bitcoin and the correlation of global liquidity, but more the directional movements. So basically, and based on her research, she says that Bitcoin has the most correlation in a directional sense than any other asset in the world with global liquidity. So apparently, according to her research, 83% of the time, if global liquidity is going up, Bitcoin is going up. If global liquidity is going down, 83% of the times, Bitcoin is going down. And this is the highest correlation in every asset in the world. So I think this is something you should include in your data when you are buying or selling Bitcoin, or let's say investing, because this is an enormous correlation. I mean, 83% of the time, that's a crazy correlation if you're a statistician. So that's something you have to look at. But then like so what's important? So now we know it's correlated. We know the direction follows as well, but now we have to know, okay, how much is it going to grow? And that's Michael Howell made a very good research about it. So basically every 10% moves in global liquidity. So let's say if global liquidity is increasing 10%, then we see, based on the last 18 months, Bitcoin is increasing by 4.5x that amount. So so let's say a 10% move increase in global liquidity aligns with a 45 move up in Bitcoin, which is also more than every other asset in the world. So that's super good to know. And according to Michael Howell, so the global liquidity cycle will top late 2025. So basically that should be the time that Bitcoin will go down as well. So to my knowledge and my data, and according to Michael Howell, the Bitcoin top this cycle will be in late 2025. And if you look at all the other data, so let's say if you believe more in the halving cycles, normally, according to the halving cycles we have every 4 years, the top should also be in late 2025.
Lines up beautifully.
It lines up beautifully. So if you don't believe in this, you can just look at some other metrics. And for me, the way I looked at it, every single metric points towards the top in 2025. So we all got some time. We got 1 more year. So now is the question, how much will this still increase? And so according to the increase that normally should happen, according to the data of Michael Howell, Bitcoin should go to 120K. So according to the global liquidity metric, the Bitcoin top should be 120K. This is something you have to take with, like how you say it, a coral of salt. So you don't have to take this my word on it. It's because we all know, me and George are in crypto already from like 2016, 2017. So we know in bull markets, the price goes way past every single metric, every single thing you think. So it goes way more up, but in bear markets, it goes way lower as well. So, but for me, I'm still gonna take some profits there because that's like the fair value. Because I also think Bitcoin is becoming more and more mature. So that's where I'm gonna take some profits. But now, okay, I'm talking like super big picture. Let me close this. Let me drink something. So now the thing is, where is global liquidity headed? And the thing is, at the moment, and this is not good, 4 weeks in a row, global liquidity is decreasing. And basically that's because the People's Bank of China, which has been the main driver, and they're like flip-flopping between their liquidity injections and liquidity withdrawals. And also the ECB and the Bank of England are still doing their QT, so their quantitative tightening, and the Bank of Japan is also moving sideways. And as you all know, there's not coming much liquidity income coming from the US as well. So at the moment, there's not much liquidity coming into the system, which is not good because we need liquidity to pump up these asset prices and especially Bitcoin, because we know Bitcoin and global liquidity is super correlated. There is not much real value behind Bitcoin. Maybe you can value it based on their electricity price as well. But we just know it's based on liquidity. The more liquidity there is in the system, the more excess money there is. It eventually flows into asset markets, but more Bitcoin, as we can see with this data. And so the thing is, global liquidity this week alone shrank by 443 billion US dollars, and this is already 4 weeks in a row. So this is really not good, and we can just see it here. So normally, so let's recap it again. So normally, 83% of the time, Bitcoin goes in the same direction as global liquidity, so should be going down. But also there is a lag. So usually the lag is between 8 weeks and 12 weeks. So normally we won't see this yet, but watch out over the coming weeks. So we know there is a 8 to 12 week lag. So it can be possible that in a couple of days or weeks, because of this shrink and decrease in global liquidity, Bitcoin can follow and Bitcoin can go down as well. And Michael Howley himself just put out a tweet, and you see this. These are global liquidity versus Bitcoin 6-week changes. So why 6-week changes? It's just to filter out the noise and get a bigger picture. And so you see this follows incredibly well. And as you noticed, right now Bitcoin should go down according to this. And to me, this is the best metric on how to value Bitcoin, to know where it's going, to know where it's heading, how much it will decrease, how much it will move up. And according to this, in a couple of days or weeks, this should be trending downwards according to the global liquidity. I just have to say this is short term. As I just showed you guys, the global liquidity cycle is still expanding and will top in late 2025. So there will be more and more liquidity coming in, because we know that the central banks are cutting rates. We know there's massive debt that need to be rolled over. So there will be more and more liquidity coming in. So we know eventually this year, the debt will increase like by about 15 to 20%. So we know that's going to happen. This is just, maybe to me, this, according to global liquidity, this can be a local top. And based on the social signals I'm seeing left to right, when I go to my tennis club or do something else, I see too much chatter about Bitcoin. Coinbase is the #1 app in finance again in the US, which is also a top signal. So based on that, to me, I don't think there's much room left. But we're going to talk about it later as well. But this is something you should be considering, because to me, this is the most important thing. And like I said, if you want to learn more about this, because I cannot cover everything in 10 minutes, go check out my latest video and you hear it from the man who created this himself. Yeah, sorry that I'm just rambling, George, but
no, it's okay. It's okay. We have some questions already, so I think we can do those because it's about the topic, you know.
Okay.
Someone is asking, is saying it's not like liquidity goes up first and then Bitcoin, they go up or go down together, so it's an unusable indicator. What are your thoughts on that?
So like I said, there is a lag. So there is a 8 to 12 weeks lag. So first liquidity goes up, global liquidity. So you need to measure global liquidity good. It's not just M2, like just M2 money supply. It's global liquidity. So I think M2, I think Michael Howell said M2 is just like 40% of global liquidity. So make sure first you measure global liquidity well, because a lot of analysts don't know how to measure it. Also because it's not super easy. And second, so to answer on the question, yes, there is a lag. So there is a lag from 8 to 12 weeks. The thing is, and Michael Howell told me as well, that everyone knows about this correlation, and the lag is going smaller and smaller. So the more we go into the future, the lag will go smaller and smaller. What I mean by that is maybe in a couple of weeks, the lag will only be 4 weeks, and then eventually it will maybe go like 1 week or something. So there is a lag, and you can just measure it on the charts and And yeah, that's just the data from Michael Howell. He measured this every week. So there is a lag, and you can see it as well, but I don't have it open right here. Bitcoin has a lag with gold as well. So the thing is, gold precedes Bitcoin moves by about 3 to 6 months. So we saw the massive increase in gold a couple of months ago, and I think now 3 months later we're seeing this increase in Bitcoin as well. So it's not only liquidity driven that I know it's because of the presidential election cycle that Trump won, but it's something to consider as well. And you see it clearly at the global liquidity. Gold is going down. Why is gold going down? Because liquidity is going down. It's as easy as that. So, and of course, gold reacts first to that, and Bitcoin will react a bit later. But there is a lag. Sorry if I made it longer than it should be, but yeah, there is a 8 to 12 week lag.
Yeah, that also answers another question. Someone said, if global liquidity is going down past 4 weeks, then why is Bitcoin pumping? That's exactly the same answer, I guess.
And also it's and we talked about this last stream with you, George. You don't have to look at one metric.
Exactly.
I know
yeah.
global liquidity is the best metric, but if Trump is elected and he's saying that they're going to make a strategic Bitcoin reserve, yeah, global liquidity can even go down to zero and Bitcoin will move up. I mean, if the president of the US is saying that they're going to make a strategic Bitcoin reserve, even if global liquidity is going down, of course the Bitcoin price will go up.
Yeah, makes sense. All right.
All right, so moving. Can I?
Yeah, you can.
we'll answer more questions maybe later.
Yeah, sure. Go on.
So then moving on is the dollar index, which is super important. So to me, this is the second most important thing. Why? So because we know there is a very good inverse correlation with the Bitcoin and the DXY. So the DXY is the dollar index. So we know there is an inverse correlation. So if the DXY is going up, so the dollar index is going up, Bitcoin moves down. And I'm just going to show it maybe on my trading view chart. Let's maybe close this up and let's go over to the monthly. And this is something I showed on my last Saturday stream as well, but it's super important. Maybe let's not go too far. So let's say the first Bitcoin bull run was in 2013. We see the XY going down. Here was the top, the XY goes up, Bitcoin goes down. Let's do this. When was the bull run before? 2016, 2017, the XY went down, Bitcoin went up, massive bull run. When did we top? Well, we topped here, when the XY was bottoming. When did we go down into the bear market? Well, when the DXY was going up. When did we bottom? Exactly here, up, new Bitcoin is going up. So the correlation is also there. And so we know if the DXY is going down, it's very good for Bitcoin. If the DXY is going up, it's bad for Bitcoin. And as you can see, these last couple of months, so basically the last 2 months, let me put it here in weeks, we see the DXY pumping, which is not good for Bitcoin either. So like I just showed you guys, there is a correlation, which is very good, the correlation. So according to the DXY, and also if it goes above 106, most of the times this has correlated with the correction in Bitcoin. And as you can see today or yesterday, this went over 106 in the DXY, which is not good for Bitcoin either. So I don't hope I discourage your viewers, because maybe everyone thought this was going to be a super bullish stream. But you have to look at everything. You have to look at how everything is doing. So of course, the most bullish thing is the strategic reserve and Trump winning. But look at the other metrics. Will this continue? Can this continue? How high can this continue? At the moment, global liquidity not in favor, and the DXY going up is not good as well. But of course, I don't know if I have it here open. No. So, but of course, we know that Trump wants a weaker dollar. Why does Trump want a weaker dollar? Well, when your dollar is weaker, so when your currency is weaker, that will boost exports and that will create more jobs. So I think Trump will, when he goes into office, will want a weaker dollar, so there will be more jobs in the US. Sorry, I'm gonna drink my. And then another thing is, and I saw this just yesterday, so basically the Department of Government Efficiency, DOGE, so that Elon Musk will be leading. I think that will not be good for Bitcoin either, because everyone thinks that's going to be good for Bitcoin, but I don't think it will. I think it will be good for the DXY, because the more you cut into government spending, the better it should be for your currency. So the dollar index will move up, which is bad for Bitcoin. So that's something you need to consider as well. So yeah, this was my part about the DXY, which is not looking bullish either. But let's move over towards the interest rates, which came out yesterday. So the annual inflation rate hit 2.6%. And this was exactly on the expectation. So I don't think we pumped on this, or maybe some on the lower time frame, but this was exactly according to the expectations. But it's moving higher again, and we see this very good on Trueflation. So basically, Trueflation is a website based on oracles, and they have the real-time live data of the inflation, and it's mostly precedes the US government numbers. So if you want to know where inflation is headed before the government numbers come out, just look at Trueflation, and we see US inflation going up. And I think the Fed knows it. I think inflation will go up. I don't think they will keep it under control to their 2% target. So I think we will live the next decade with higher than normal inflation. And Bitcoin is good in a sort of climate where inflation is high. So that's why we hold Bitcoin, because we know there's going to be a lot of monetary inflation. The only thing that maybe can save the inflation is technological advancements like we see now with AI and everything. But I think, to me, the inflation is going to go higher than 2%. And so the next decade, so in the long term, it will be good for Bitcoin. But how will this affect Bitcoin in the short term? And that's the question I think everyone is asking. And the way you have to look at it is, so basically we see inflation going up. What can the Fed do to get inflation back down? Well, it's to raise their interest rates. But that's not something the Fed can do, because every other currency in the world, every central bank in the world is at the moment in a cutting cycle. I think it's like 70% of the central banks worldwide are at the moment cutting their interest rates. And the Fed cannot choose, yeah, we're not going to do it, because then there's going to be too much currency volatility. And you want every currency in the world not to be volatile, because that's not good for the average person when there's too much currency volatility. So the Fed is just going to follow. And why does the Fed need to follow? Well, as well for the jobs, because I'm not going to explain it, but you have like the sum rule, and basically the sum rule is moving averages of the unemployment numbers. And when the unemployment goes way too high, then we enter a recession. And so you have to cut the interest rates to create more jobs. So at the moment, the Fed is like, we're going to go inflation, we're going to let it go up, or we're going to go for the unemployment. And I think they're going to just cut their interest rates, also because they don't want to go into a recession, and as well because they don't want currency volatility. But we can just look at the futures from the CME group. So basically, this is like futures if the Fed is going to change or not. And at the moment, the market is thinking that 62% chance that we're going to see a rate cut of 25 basis points next FOMC meeting. But 37% is thinking there will be no change because the inflation is going up, which is not good for Bitcoin if there's not going to be a change. So the thing is, okay, inflation is going up, which is good in the long term for Bitcoin. But in the short term, because inflation is going up, the Fed cannot aggressively cut their interest rates. So it's like best of both worlds. Well, in the long term it's good, short term it's but yeah, you can just look at the predictions, and the next meeting is the 18th, and like I said, 60-40, so it's undecided. But the thing that worries me the most is that the futures are thinking the Fed is gonna stop cutting their interest rates at 3.75%, which is super high. So the thing what you have to keep in mind is previous bull run, and it started all during COVID. We saw this massive bull run, but the interest rates were at zero. The interest rate is 0%. Money didn't cost a thing. So you have to factor this in as well. I think everyone now is thinking, yeah, this is going to be a bull run, everything will run. But oh, watch out, the interest rates are still super high, and they're expected to stay even high during the whole bull run. So I don't think we're going to see a massive volatility bull run where we wake up and everything does more than multiple X's. I think if the interest rates stay like this, I don't see that happening. But of course, it's worth speculating in the long run. Higher interest rates will lead to more global liquidity. So that's a thing to consider as well. But so in the short term, I don't think we're going to see a massive Bitcoin bull run. I think it will go up gradually. And I think these last couple of days, it went too fast, too quick. I'm just going to say one more thing, and now I'm going to start speaking more Bitcoin related. And that's, of course, the Bitcoin ETFs, which is like the third or fourth most important thing at the moment. So here, this is from Eric. This is like a senior ETF analyst for Bloomberg. And so he said IBIT just saw 5 billion in volume today for the first time ever, which is crazy. So this is crazy. There's a lot of institutional demand into Bitcoin, which is super good. And you see this as well. I wanted to show this to you guys. So basically, the longer an ETF is on the market, the more and more demand it will have over the years. Normally, the first year, you don't have that much demand. And basically, so year 6 was the best year for gold in terms of inflows. And you see already year 1, Bitcoin has way more inflows than gold. And it's not even the end of the year. I think when did the ETFs came out? I think it was somewhere around April, May or something. Maybe you know it, George?
Not sure, to be honest. I can look it up if you want.
No. So, but just to show that it's super crazy that we're already more inflows. So this is super important at the moment. This is a very good ETF dashboard from Carpe Noctem, and you can see it as well. So this was when we made these all-time highs. Bitcoin made all-time highs as well into ETF inflows, which is super bullish. So yeah, these ETFs are good, but like you see here, and this was yesterday, they can sell as well. I mean, everyone thinks, okay, there's just going to be inflows, but no, they can sell as well. So okay, there was FOMO, there was hype, everyone was buying into these ETFs, so boomers, let's say, but they can sell as well. But at the moment, it's super bullish that these ETFs are there and everything. And I think I'm just going to leave it here. I had some more things prepared, but it's already getting late. My part, we're already 40 minutes in. So sorry, George.
No worries. It's very interesting.
But maybe to recap just. So global liquidity has been down 4 weeks in a row. The DXY is up, which is not good for Bitcoin. At the moment, the rally in Bitcoin, to me, is only FOMO and hype driven. And the rates are nowhere near the previous bull run. So to me, these are all things why I took some of the table yesterday and during the week as well. And also not just because all these things, and I think George will go maybe into later it as well, but maybe George is just more bullish. I don't know. We didn't talk before the stream if he was bullish or bearish. But we hit the targets I wanted to hit as well. I don't have it here on my screen, but basically, as everyone know, we were in a range from March till now in November. And basically, if you measure this with the FIBs from this range, the target was around here. So I took some of the table because this was just the measured move and this was the target. The next target, but George is going to talk about later, but I'm just going to go over it real quick. The next target is like from the previous top of previous cycle towards the bottom is the Fibonacci range. And the Fibonacci target, this 1.618, the golden ratio, is right here at 102K, which is also a big psychological level for a lot of people. So I think for me, this is the max it can go this year. If we measure the move, it's only 10%, which is nothing. So that's why I took a big part of the table. And just to show it, and I'm going to give the mic to you, George. Where do I want to buy back again? Is right here. But I think that's more George's part, so I'm going to leave that over to the experts.
All right. Yeah, well, definitely there's a lot of things that I agree on most actually, and it lines up beautifully with the chart as well, because obviously we've seen a big breakout out of this range, but we have halted, as you can clearly. Oh wait, I need to share my screen.
Yeah, I'm showing it already, yours.
All right, now it should be mine. Okay, so yeah, we have broken out of the range, and when Bitcoin goes, it goes hard, you know. Daily candles just keep going up, but as you can clearly see, we have halted and built up a low time frame range as well. So that's something to keep in mind, and momentum has definitely slowed down. So I could definitely as well see a low time frame retrace here into 80Ks maybe even, before potentially heading way higher later into the year or maybe even next year. But yeah, the first thing I wanted to talk about was exactly what you just talked about, and what I said what I said in the start of the stream, how to set targets when price is trading in price discovery, because obviously when price is not trading in price discovery, you have your support and resistance levels that you can draw. I mean, there's a million ways to do it, but when price is trading in price discovery, people often panic and don't know how to do it, and then they just end up holding their positions because they don't know when to sell. So I'll give a couple of ways you can use to identify potential resistance areas when price is trading in price discovery. So the first one that I use pretty much the most are the Fibonacci levels, and I'm just gonna draw it right here. It's the 1.618 and just the 2 Fibonacci level, which is basically just the extended move from a leg down. And what I mean with that is, how you draw that level is you take the last leg to the downside and the low that led to the break to new all-time highs. And on the current Bitcoin chart, you can look at it in two ways. And the first one is on the 3-day, the daily, or the weekly chart. And if you check where the latest down leg was from, well, it was obviously from the range that we set from back in March earlier this year towards the low in August. And if we draw the Fibonacci levels from there, you're gonna see that the 1.618 level was sitting at 90K, and the 2 Fibonacci level is sitting right at 100K, right below that. So that's a huge level, because psychologically as well, 100K is going to be a big level as well, but we'll talk about that later. And another leg is the even higher time frame leg from the last bear market, which is from this high, the previous all-time high, to the all-time low from the bear market. And what you're gonna see then is that the 1.618 level lines up pretty much. It's just the general area with the 2 Fibonacci level of the most recent move to the downside. So I think those levels you see right now are gonna be important What else I like doing is marking out a range and then extend that range, or simply copy pasting that range above the range you've drawn. So what I mean with that is, for example, what was the range that we've been trading in most recently, right? The range that I've had for ages was this one. And what you can do then is simply copy and paste the range right above here. Boom, like this. And what are you gonna see? Look how beautiful. Where did we top? Well, exactly at the extended move from the range that we've been trading in all of this time. Beautiful here. This one
Damn, that's cool. I didn't know you could do that.
Yeah.
And is the midline then a good buy?
Yeah, you're gonna see that the levels are gonna be pivotal on the lower time frames as well, very often. So you can also simply do it like this, go to your settings and then just draw the 2 level and the 1.5. Set it to red, then you have a cleaner view like this. This one depends more on how you draw your range, right? Because obviously there's also a million ways to draw a range, but I made a video about that on YouTube as well, how I personally set my range levels and which ones I use. And they're purely based on liquidity, purely based on taking stops below key highs and below key lows. And that's how I've come up with this range. And you can go check back. I've been using this range ever since we were trading down here. And as you can see, the extended move to the upside beautifully top Bitcoin the last couple days. So that's another way to use it. You can honestly keep copy pasting them, but the further away you go, right, the less these levels are gonna mean anything. And that just makes sense, because the further you run away, the more the higher time frame levels are gonna come to play. So then back again, you can go to the weekly or the monthly and, for example, draw your range level like this. And what do you see then? So that's been the range, also a range that I've been talking about a lot, with the range high, back down to the lows, then back up to the highs, swept the highs, closed back below, and that's when the bear market started, all the way to the lows, swept the lows again, reclaimed as soon as we closed strong about range lows. We started rallying all the way to new all-time highs, then halted above range highs. No surprise, big resistance. You can do exactly the same here and mark those levels out as well. And then what are you going to see? Those Fibonacci levels, the 1.618 level and the 2 extended move level, line up beautifully with the extended move from this range. So that's why I think just the 100k area in general is going to be very important. And in my opinion, if you're targeting 100k, you either target right below it and take some profit there, because there's a good chance that at the first go, like getting into that level, everyone's getting excited, and that's when you often front run that level. Or you target like a couple thousand above it, because if you then ultimately break through, it's likely that we see some continuation. And so that's another way to have targets in price discovery, is just looking at psychological levels, just round numbers. It might sound like an easy way, but it works very beautifully. And also with, for example, meme numbers. I mean, I've seen, for example, Doggy, I don't remember the exact numbers, but it was like 420, where the level got tagged, or 69 level. It might sound
Wasn't
dumb.
the Bitcoin top like 69 420k,
Yeah,
like previous top?
exactly,
on some exchanges?
Exactly. So those numbers, it's just because it's a funny number, but sometimes it actually works. And And it's the same with round numbers, obviously, which is also why I think 100k is gonna be a big one. And what I always like doing with those round numbers is just front running them. So a little below 100k, a little below 110, a little below 120. And that's basically how I do it. Now, how do I take profit? You will never see me sell everything in one go. And I think that's still a thing that in general, for retail, people think that they have to buy everything in one place and sell it everything in one place. Like friends
Exactly.
of
Yeah,
mine
exactly.
in real life, ask me where do I have to sell, and then or where do I have to buy, or is now a good time to buy? And my answer is always the same: buy a bit, and if it goes lower, you buy some more, or sell a little bit when you're up in big profit, and if it goes higher, sell a little bit more. If it goes lower down, you can add a little back in. And
Because
that's
it's not exact science, right? You're doing very good professional TA, but it's not exact science. It's like probabilities.
exactly, you never know exactly what's going to happen. So and that's exactly what my plan is for Bitcoin as well. Personally, I haven't taken any profits on my spot holdings yet because I think we see at least 100k this bull run. Do I think we have locally topped? I mean, it depends on how you define locally topped, right? So I'm gonna remove all of these levels now, and we'll take a look at some levels on the lower time frames. So starting off with the daily, what I immediately don't really like about the daily is all of these unswept lows that we have below current price action, right? We haven't taken out any of these daily lows. Is that a bad thing? Well, no, because what you're gonna see very often in bull runs is that you just generate liquidity, right, to the upside with making higher lows, and everyone is talking about them and everyone is waiting for a sweep. But what Bitcoin does, it just runs away from it and pumps to new highs. Now, whenever you get that, in my opinion, you don't get the quick you get the quick upside moves straight back down, higher low, another higher high, another higher low, and then you run away from it. While in this case, we've sort of built up a range here on the lower time frames, which is why I still think that we could go down for those lows. What's range high here? These highs. Why those? Because those were these highs right here that got a strong move initially above them, a strong close, everyone excited, everyone targeting 100k, but then unfortunately we snapped back down inside the range and closed ugly. What confirms that is price failing to make a higher high from here, right? Because you could still see this as the higher low from here, but we failed to make a higher high from here. Instead, we pump back into supply, right? And then a new low. And what we're seeing right now is just lower highs and lower lows. It's not that clean, but this to me is a little bit concerning for the lower time frames as well. So what would invalidate this scenario? Well, immediately a break above here. This area is supply that got rejected and where we made the lower high on the lower time frames. So what invalidates this? A break above here, boom, retest, buy it, and target new highs. Okay, that also means that this area is gonna be resistance more precisely, right? We're trading this close to liquidity above these highs that I think it's likely we sweep them maybe in the next couple of minutes even. I see it's looking rather strong. What led to the local lower low, to this lower low? Well, sideways price action up here. So this is gonna be your supply, more specifically to keep an eye on. So as long as Bitcoin stays below here, be cautious, right? Because I could see this as a sweep into supply that just send us lower towards these lows. If we get a break above here and start consolidating here, then I think we're on our way to the next leg up higher, and we'll be trading closer to towards 100k. I'm not saying straight to 100k, but at that point it will look a lot better on the lower time frames. So this is just low time frame analysis, and what you have to keep in mind, what I personally have learned from the last bull markets, whenever Bitcoin is in a bull market, it tends to just go and invalidate your short setups or your bearish setups really quickly. And that's not rocket science, it's just obvious. In a bullish trending market, and in a trending market to the upside, bullish setups have a higher probability of succeeding, and that just makes sense. In a bearish trending market, bearish setups have a higher probability of succeeding. So for me personally, after the break above all-time highs, shorting is just not worth it. If you take a look at what shorts have paid off since, I mean, call October, let's say, like, you could argue this one, but even that one only paid off if you caught the high with a tight stop, right? And closed at the exact bottom. And even then, it's only like a 2 or 3 hour trade. For this move, for example, it's exactly the same thing. Only if you caught the high with a tight stop and you closed at the exact bottom, the short was worth it. But imagine how many people tried how many times to catch a move to the downside. It's way more difficult to short in a bullish market structure than it is to just buy the dips, get long, and just letting it ride. And that's exactly what I've done since all the way down at 57k. I'm still fully in my longs from all the way down there, and I've been just letting it ride. Shorting for me, like, I've been there, you know, I've done it. I've tried to catch the highs and short it, also because I didn't catch the move to the upside. That's when you get angry, you start revenge trading, you want price to go down, and that's why you start shorting. But trust me, it's just not worth it. So is there, I wanted to say, is there a chance we trade lower from here? Obviously, there's always anything's possible, you know, but is it worth shorting to me? For me personally, not. I mean, if you're huge in spots and you're in margin longs as well, maybe on a different exchange or anything, a little hedge here definitely makes sense, like this, with your stops right above this area and your target maybe down here. But as you can see, 1.8 R for a probability in an that's not that high in an uptrending market on the higher time frames. I mean, look at the weekly. For me personally, that's just not worth it. And so what can you use this for, and how I've been playing it and what's been working for me is just using this information to not blindly long any altcoins and blindly just long Bitcoin, right? Just to be cautious that there is a possibility that Bitcoin is gonna do something ugly and trade lower, and not have too much exposure to altcoins, for example. And also important to have some power to buy the dip. So how I like playing it is just now having some power left. If it does this and it drops to the lows, that's where I'll load back up on altcoins that I like, altcoins that are strong at that moment. Maybe add some to Bitcoin. For me personally, it's not worth longing any more Bitcoin, since I'm already long from all the way back, all the way down there, and I'm big in spot as well. But I like to try to time it at least with strong altcoins that I like at that moment, and to buy those dips at that moment. So short term frame, there is reasons to be cautious, but high time frame, I think We don't see that much downside, and instead I think there's a higher probability that we just range a bit and continue to go higher, than to risk missing the move to 100k by shorting here for what? A 6, maybe even a 10% down move. Even if you're targeting like sub 80k, I think that will be a great buy for the future. And in my opinion, it's not worth risking that to potentially miss the move towards new all-time highs. And of course, trimming a little bit, I'm not talking about that, but not the reason to panic at the moment yet that the top is in. So I wouldn't be surprised, honestly, if we trade at new highs within the next couple of weeks. So yeah, there we have it. That's my low time frame thoughts, some high time frame thoughts with targets. I'm not sure if everything's clear, if there are any more questions.
That was great, to be honest. So you're more bullish than me, which is good. And I also want to add, I don't see us going, well, I don't see Bitcoin going lower than like 80k, 79k. So if you don't have any Bitcoin yet, of course, this is a good time to buy some spots. I just wanted to say that I sold some. Full transparency, I'm around like 50% spot, 50% allocated at the moment. So that's how I'm playing it.
Yeah, I mean, I think it's definitely possible that we retest down here. That's also one thing that I don't really like on the chart at the moment, that we barely have a wick on the weekly. So what would be a beautiful scenario for me on the weekly at the moment is, now we're going into the weekend. We range here a little bit, close the weekly like where we are at right now, maybe a little bit lower at 88, 87, maybe a little bit higher at above 90k, doesn't really matter, but we don't make new highs. We close it right here, and then the next weekly we trend down, ideally leave a flat top to the upside, and we just go for a quick sweep below previous week's low, which would be at 80k, maybe get a quick dip below 80k, and then just run it back and send it to new highs.
Make sure you're allocated there, because if you don't buy there, well, so the thing is, if you sell in a bull run, make sure you're not too greedy to buy too low. I think if you can low already here, or maybe like 80k at the max, buy there, because in a bull run you don't get the entries you want.
Yeah, well said. So yeah,
no, that's good. Maybe if you want, we can do a couple of questions. Maybe not too much, because we're already 1 hour in. So
yeah, sure.
You have some questions or not?
Someone
I got
is asking...
OG Bop in the chat just saying he's a good trader. So
nice. Someone in my chat is asking when moon, sir. So I'll say, yeah,
Bitcoin. We're on our way. We're just at the moon. We just landed. No.
What else? Someone says I expect a bigger alt season this cycle or coming months, because total market cap also increases bigger in size than last bull. What do you guys think of that idea? Because total market cap also increases.
I can start. So if I think we will see an alt season. So if you're familiar with like the phases of like a crypto cycle, so always first Bitcoin moves, and then in the following months or weeks we see the altcoins moving. I think we will see that this cycle, but it will be different, and we already saw the difference. So I think this cycle will be more about meme coins. So I think it will go from Bitcoin to meme coins, and I think a lot of bigger altcoins will get left behind. So I think we will see that happening, but maybe not yet. So I think we now got like a taste of it, but I think these things happen more and more towards the later end of the cycle. So, and if we think, well, I think, and Michael Howell thinks, for example, with the global liquidity, that we're gonna top late 2025. So that also means that the big alt season, where like everything goes crazy, will also be near the end, near Q3, Q4. So what I think, and I put a tweet about it a couple of days ago, that we're gonna go up, but slowly up maybe now, till Trump's inauguration, and that's like the 20th of January. But I think Q1 and Q2 of 2025, it will be slow. We're still in the bull run, so everything will move a little bit, but not going to be gigantic moves. But I think the bigger alt seasons and the Bitcoin top, we will see around Q3, Q4, and that's when the alt season will move up. One good thing as well, what I want to add is, so we saw these previous days that the stablecoin supply is going way up, which is also a very, very good indicator for altcoins, because that's just money, liquidity into the system that will flow into altcoins. Just one negative thing are, like I said, the interest rates. And the interest rates are extremely correlated with alt seasons. So I don't have it open, but this is, for example, the Bitcoin dominance chart. So as you know, as you see, we're totally not in an alt season yet, because Bitcoin is owning, well, is doing better than the most altcoins. Well, maybe you can say, no, my altcoin is outperforming Bitcoin. Okay, but in general, Bitcoin is outperforming all altcoins, and that's just because of the interest rates. So I don't have it open, but I posted it on my Twitter. You can see by my highlights. If you see the interest rates going down, then you see altcoins going up. So it's like super correlated. And what I just said before, the interest rates are going to stop at 3.75%, which is still super high. So I don't think we will see an alt season that we saw before, but we will still see one. So I hope that answers how I view it.
Yeah, well, we're already seeing some explosive moves on meme coins. I personally don't think that those high caps, I mean, we'll never get an alt season like we used to have back in the days, and I've said that over and over again. But last couple weeks to months, I've been rethinking that, and I think that meme coins are the place to be right now, and will be the place to be over the coming months. You're already seeing some crazy moves on meme coins, and it's just pure nostalgia. How do we say it? From back in the days, those explosive moves, your money like tripling overnight. And I haven't seen that in a while, to be honest. So I'm excited for that. Do I think alt season? Well, if you call those meme coin pumps the alt season, then definitely, yeah. So yeah, when? I mean, not sure. We'll see, I guess. So, what else do we have? Is there a possibility that there will be no alt season, just some meme coin and Bitcoin rallying? Yeah, I mean that's what I just said. If you don't call meme coins altcoins, then I definitely think that's possible. If you see meme coins as altcoins, then I do think there will be one. I mean, we already have seen one, you know.
The thing is, just this cycle is, in my opinion, more focused more than before on Bitcoin, because the thing is, Bitcoin is going to be a strategic reserve. The ETF is like Bitcoin inflows, and to me, the only altcoin with an ETF is Ethereum, but Ethereum is not going anywhere. So,
No.
so some of these flows, some of the gains in Bitcoin in the ETFs are not able to flow into altcoins, and that's why we saw these previous alt seasons in previous cycles. Because a lot of people made big gains with Bitcoin and they wanted to go further down the risk curve. But before they could do that, because all the Bitcoins were on exchanges, so they could just pick a lower altcoin on the same exchange. But now a lot of inflows, a lot of Bitcoin buyers are on just their brokerage accounts, and they cannot go from their brokerage accounts to altcoins. So maybe we'll see a bigger alt season when we have like more altcoin ETFs. I think that will happen eventually. I mean, for Doge, that's going to happen in a year or two, I think. But I think also because of that, we're not going to see the same alt season as we just saw. What won't mean that we will not see one. I think we will, of course, see one. Because of course everyone wants to gamble, everyone wants to make life-changing money. So of course we will see that. But at the moment, to me, we're still not seeing it because Bitcoin dominance is going up. There are just some outliers, like George said, some meme coins that tripled. But it's not like we've seen before. Bitcoin dominance needs to go down for me to be real alt season.
All right, nice. Well, then I think we can wrap it up here. There's no more questions in the chat, so I guess we'll hop
That's
off.
perfect.
It's been a good one. Thank you, Jack.
Yeah, I think it went great. No, thank you.
We'll do this more often. So there will be another one. Keep an eye on our Twitter. Follow Jack on Twitter. And myself, of course, if you haven't already. The links are in the description. And we'll see you guys in the next one. Bye.
Yes, great. Thanks. Bye, guys.